right, good evening, everybody. Today is Wednesday, December 28th, 2022. Now, if everybody remembers correctly from last night's live stream, we wanted to mainly focus on a couple things. And I think it's appropriate. Hold on, let me put my mouse away. Forgot. I think it's appropriate to quickly review what we talked about yesterday. So, we've been watching the major equity indices, but more specifically, we've been watching the bond market, okay? So usually the saying goes that junk bonds will move first, and we could use them as a leading indicator. Now, we talked about a particular ETF that I tend to watch. The ticker symbol is JNK. And if you guys have been following me on Twitter, I've actually been posting about the junk bond market quite frequently, saying that I'm looking for a breakdown, and a very significant one. And it seems like we got that today. Junk bonds, or the ETF, the Spider Bloomberg High Yield Bond ETF, JNK, is down about 2%. It's a big move as we're talking about bonds. So check that out. Also, let's take a look at U.S. Treasuries. If we go to the U.S. 10-year, let's not look at the bond, let's look at the yield. Yields are actually going up again. So we had a sell-off in the bond market. 10-year U.S. Treasury yield is at 3.866%. Junk bonds are also getting sold off. Yields are rising. But we also talked about Apple. We talked about Apple, ticker symbol AAPL. Now, we talked about a specific saying on Wall Street that usually the generals are the last ones to get shot. And we reviewed Amazon, we've reviewed all the other major large FANG stocks, such as Microsoft, Alphabet, and all the others. And they've all pretty much entered stage 4 significant bear market declines, except Apple. So we've been watching a key level, which was $130 on Apple. And I said, I think if we break down, we could go into a significant stage 4 decline and maybe even gap fill around $100 on Apple. And I think we cracked today. Apple was down 3%. And I think this is going to be the start of probably the final crescendo, if you will. So we'll talk about that a little bit more today. We did get pending home sales data out. And not good. So we covered sort of the Case-Shiller index yesterday. Housing market is slowing and cooling significantly. But I think the biggest topic as it relates to the equity market is that Apple is finally starting to roll over here. Once again, if you want to have a visual of this, just check out my Twitter. You can follow at Walks Wall Street. And we've officially broken that $130 mark on Apple and selling off quite nicely. We're down about 3% today. So team, that is all I have for you. Let's go ahead and close up the laptop and we will get started on the stream. I trust all of you had a fantastic day. So allow me one moment to put away the computer. I'll say hello to everybody in the chat and we'll get started. Now, thankfully it's not as freezing as it was yesterday. So I think it's actually going to be pretty good. Let me turn up the brightness on my phone. Hey, Richard Vogel is here. What's up? I see Mike C, Gary Carpenter, Ryan Beck. Good to see you guys. Pretty nice view from the office tonight. You have a very clear view of the one and only St. Patrick's Cathedral right here. But also, if you look directly down here in this little corner, that's actually the Rockefeller Center skating rink. And we are standing directly above Saks Fifth Avenue. So let's get started. I'll say hello to everybody in the chat once we get downstairs, because I think we may have some internet issues in the WeWork building. But a lot to cover. And I think a lot of the things that we've been talking about are starting to come to fruition. And the bond market is definitely leading us lower. Yields were pretty much higher across the board, especially the 10-year U.S. Treasury yield. You never know. Maybe we'll get above 4% before the end of the year. We only have 2 trading days left. You never know. We'll see. Hey, Noel A is here. What's up? Welcome, everybody. Hopefully you had a good day. Lizzie is here. Says, hey, Tom, how are you? Hey, Lizzie. Good to see you. Hey, Sally is here. What's up? Wendy, England. Good to see all of you. We are about to head out and about to the outside world. I think it's actually pretty warm out. It may be, 48 to 50 degrees. Ooh, it actually feels really nice. So good to see everybody. We are standing right outside the Saks Fifth Avenue. I see Julia M. What's up? Dusty Cole, Western Mass Dave. What's up, Dave? Sally is here. Wendy, England. Mike C. Gregory is here. Says, good evening and hope you all had a productive day. Thank you. I appreciate it. Adrian Palmos says, hey, Tom and team. What's up, Adrian? Jay says, hey, Tom, thanks for the trading idea on Apple. Made good money today. I appreciate that. I do just want to say, just obviously briefly, and everybody pretty much already knows, but let me just turn off the Wi-Fi. Now, the topics that we cover on the live stream, right, each and every day, obviously they shouldn't be used to generate your trading ideas, right? We just have open dialogue, open discussion about the broader markets in general, the economy. So just as that disclosure, even though we may talk about individual stocks, even though we may give our bias or view, nobody watching the stream should, make a decision just solely based off of what we talk about here. We don't promote anything here. We just, have an open dialogue and discussion, just due to all the, I think it's just better if, things stay that way. But I appreciate all of the kind words. Vivian is here. Dan Zhang. Hey, what's up? Dan, welcome. Good to see you. Says, hey, Tom, I can't believe Tesla hit 108 today before the rebound. Yeah, and that's another thing that we've been talking about. Look at all these tourists here, everybody. A lot of people. I think they're trying to get the last glimpse of the Saks Fifth Avenue light show before it goes away for the end of the year. But look, a lot of these stocks have been really, really hammered. Tesla especially, right? Now, here's what I would like to not really necessarily warn about, but I think we need to be cognizant of this because, specifically with Tesla, right? It's been getting hammered. It's been pretty obvious. There's been multiple factors as to why, but usually a lot of the shorts on the street are very, very late to the party. So you got to realize, beautiful view of the Empire State Building here on Fifth Avenue. One of the things I would say is when these stocks are very aggressively extended to the downside, a perfect example would be Tesla, right? I mean, this thing has just been getting bombed every day. It's probably some of the most egregious extension to the downside from the 50 and the 200-day moving average I've ever seen. So I wouldn't be surprised if you could see Tesla snap back and rally like 20%, 30% in a day, right, off of these massive, vicious short squeezes. So I would just be cognizant of that for anybody. I know we have a lot of people that actively manage their portfolios that watch this stream. The markets are very, very oversold. So just watch for those vicious snapback bear market rallies. Hey, Creators Talk, good to see you. Welcome. Dan Zhang says, Tom, do you think Tesla's hyper growth in the past 2 years had a lot to do with the high trading volumes from the retail side? Yeah, I mean, I think with any sort of high beta growth stock, Tesla's main move has been driven, it's been a massive, in my opinion, a big liquidity event, right? Now, Tesla's a great company. You guys know I talk about how I want to physically get a Tesla myself. Oh, look at this. Beautiful view of the Rockefeller Center Christmas tree. But in my view, I'm not married to a particular stock. I mean, if I have no emotional attachment to anything. I mean, if the thing cracks its 50-day, I mean, I abide by the sell rules. I can't physically ride these stocks down 80%. It's not sort of what I do. But, you know, I think the main drivers in any of these sort of, you know, very high beta growth stocks has just been ample liquidity. And when you have very accommodative monetary policy and ample liquidity, you have a lot of these stocks that go through a multiple expansion. So they will get extremely extended on a price to earnings, on a price to sales. But as liquidity gets sucked out of the market and as your risk-free rate changes, the future value, or I would say the present value of a company's future cash flows fundamentally change, right? And then the street needs to re-rate that. So you could have the best company on earth, but in a bear market, when the Federal Reserve is tightening, the stock is going to go down, right? I think I always post on my Twitter that, you know, a reminder, in bear markets, stocks don't need reasons to go down. They just go down, right? So it's a good point, though. Hey, Just Jennifer is here. What's up? This is Hey Tom. There's a lot of people out tonight. Yeah, Just Jennifer, you're right. There's a ton of people out. Now, we're standing directly outside of the St. Patrick's Cathedral. There seems to be a lot of tourists. Now, here's my view. I think a lot of people decided to take off for the remainder of the year because there's a lot of people in the city, and it's been this crowded almost all day. I mean, I was in the office today, and there's just been a steady stream of tourists up and down Fifth Avenue. So, hey, Gary Carpenter is here. What's up? Matthew M. Says, I was just going to say it looks busy. Really busy. Mike C says, Tom, is the 50 and 200-day moving average rule apply only to volatile stocks or also on like Coca-Cola and Johnson & Johnson? I use the 50-day and the 200-day as guardrails. And there's a really famous investor, very talented, probably one of the most talented investors of our time, that goes by the name of Paul Tudor Jones, who uses the 50-day and 200-day. Now, there's an old saying that he always says, and if a stock or an index is living below its 50-day and 200-day, he's out. You don't get involved, you don't buy it. And those are really the rules that I've stayed and sort of abided by. And I think that, you know, if you respect those rules, you know, you won't get caught in these really harsh, egregious declines. Here you have the light show here. Now, I will say something else, because we've been talking about something that's called a post-analysis, right? And I actually just finished my post-analysis today. I just finished it. And you'll notice before all of these major stocks really go off and have their very vicious price declines, they spend multiple weeks, 2 or 3 weeks, sitting below their 50-day and 200-day moving averages. So there's always more than enough time to get out. And so that's why I tend to use those sort of averages as a guardrail. Now, this is sort of what I do, since I'm, I would say, an intermediate term, you know, trend trader. But if you really know the fundamentals and you are obsessed with the company and you know the fundamentals inside and out, well, then maybe it proposes a buying opportunity for you. Man, the wind is crazy. But that's just really not the way I sort of operate. I'm not saying it's the right way, not saying it's the wrong way. Let's try to push up Fifth Avenue a little bit. Hopefully it gets a little bit less windy for us. Hey, Noel A, what's up? Noel A says, is it a good time to buy then? I can't tell you what to do or what not to do. But I don't buy stocks and I don't buy... I think the number one rule that'll save you the most money is don't buy stocks in a downtrend, right? And never average down. Losers average losers. I think what's gotten a lot of people in trouble this year is their favorite stock that worked in 2020 and 2021, they've constantly said, oh, it's at a 20% discount, I'm just going to buy the dip and buy the dip and buy the dip, because that's what's been hammered into these people's heads by a lot of these, I don't want to call out anybody by name, but, I'm sure everybody's heard of the term buy the dip. And that is probably one of the most horrible pieces of advice you could give, because buy the dip only works until it doesn't, right? And a lot of people who made a lot of money during the massive bull market that we had, that was spurred by this massive liquidity injection from the Federal Reserve, a lot of that success was mistaken for luck. So never average down and understand the environment you're operating in, right? I think if I've said it once, I've probably said it 1,000 times. It is so critical to understand the macroeconomic conditions and the monetary policy conditions you are operating in, okay? So some growth stocks that have very little earnings will probably perform quite well in times of easing or quantitative easing. However, they're going to get pounded in times of QT. So a lot of people say, oh, I'm going to buy this meme stock or all this nonsense, but those only work in environments where you have two things: very, very heavy and aggressive monetary stimulus and fiscal stimulus too. Hey, Bagels and Walks is here. What's up? Vinny Castellano. Hey, Vinny, I got your email. I just checked my email before going live. So I did get it. I got your book. I have not had time to read it yet. However, I am going to carve out some time to read a couple chapters of it this weekend. So I'm very excited about that, and I will respond to your email with some feedback. I'm excited. I'm excited to read it. I mean, I've never had a friend or a close acquaintance write a book before, so I'm happy to read it, man. I'm excited. Here we have the St. Thomas Church. Beautiful night tonight. Thank God it's not freezing bitter cold. Hey, Evan Weeks, what's up? Says investing is one of those topics I'm just barely beginning to scratch the surface. Been reading a lot of good books based on your recommendations. Yeah, I mean, I would say, I think my top 3 recommendations, and I've said it before, is, How to Make Money in Stocks by William J. O'Neill. And William J. O'Neill is the founder and owner, or was the owner, of Investors Business Daily, right? So you can think about, Ken Slim style investing. Jack Bogle's book, Common Sense Investing, is fantastic for people who just want to index their money in low-cost index funds. It's a fantastic book I would read. And then pretty much any book by Peter Lynch, who is the former mutual fund manager at the Fidelity Magellan Fund. I think those are all really, really good resources, and they're quite affordable, if not free, online. Looks like this is a tour guide here. Hey, Maxwell is here. Says, good evening, Tom. Good to see you, Maxwell. Thanks for joining us tonight. I see Samantha R. Robert. Hey, Robert. Good to see you, Samantha. Gary Carpenter, Vinny Castellano. Richard Vogel. Edward Adams, yeah. Yeah, I'm seeing a lot of comments like, we're taking a big hit in our 401ks this year. Now, I think the one, now that we're sort of speaking about Jack Bogle or John Bogle, unfortunately he did pass away, but his fund, the Vanguard Group, did a really, really amazing study. And essentially the study went a little something like this. And it's not necessarily, if you're talking about investing in index funds and things like that, it's not necessarily what you invest in actually makes the big difference. it's reducing the amount of fees or management fees that you pay to Wall Street. So I think one of the things that I would do this year, if you're watching and you have a 401k or something, I would get with your financial advisor and I would ask your financial advisor to say, look, go through my 401k and tell me if I'm overpaying on the management fees. Because you never know. I mean, many of you may be watching this, may be close to retirement, that's invested in a fund that's charging you 2% a year. I mean, compound interest is, one of the eighth wonders of the world or whatever it is, but it's also can work against you if you're paying those egregious fees. So I would get with your investment advisor, right, financial advisor, and just ask him, say, hey, am I paying too much in management fees? And if I'm paying a ridiculous amount, can you move me into something where I'm gonna pay less than 1%? I mean, in this environment now, guys, it's almost 2023. You should not be paying more than 100 basis points in management fees or in an expense ratio. I would even go as far to say as if you're paying over 100 basis points, you're probably getting ripped off. You really, really got to mitigate the fees that you're paying to Wall Street. You have to. Beautiful buildings here on 5th Avenue as we head to the Upper West Side. Looks like the FDNY is coming here through Harry Winston. Oh my gosh, it's an active night here on 5th Avenue. Really loud. Hey, Ryan Iglesias, what's up? Good to see you, Ryan. This is Hey Tom, that's a really nice building. Yeah, I love all the, I think you guys know this about me by now, but I love the older style architecture. And that's why I think I want to go back to the Upper West Side again tonight. Maybe we'll walk up Amsterdam Avenue, but I don't know. I really like the architecture of the old brownstones, the old railroad style buildings on the Upper West Side. So maybe we'll take a walk up there again today. Might as well. Hey, Kathy Lyons, what's up? Good to see you. Fabio says hello, Tom. Good evening, everybody. Let's go to the best stream in New York. Good to see you. Fabio is from Brazil, I believe. Thank you, Fabio, for joining us. We're right across from the Armani store, 5th Avenue. Blues Writer says, when I ask somebody, am I paying you too much for your services? I've never heard anybody say yes. That's so true, and it's funny. Now, for anybody in the chat, now that we're talking about management fees and things like that, I believe Fidelity, I could be mistaken, so don't take this at face value. I think Fidelity came out with an ETF that doesn't have any management fees at all. I think it is a zero fee ETF or an index fund that tracks the S&P 500. That's going to be a game changer, and I think a lot of other companies are going to have to start to do that. I mean, management fees has been in a race to zero since the 70s, which is good for retail investors like us, right? We don't want to pay, 100 basis points, 200 basis points in management fees every year. I think it's really crazy. James Tiger says, hey, Tom, so Gasoline Alley Coffee is good. Any others? Yes. So tonight we're actually going to be walking to the Upper West Side. One of my other favorite coffee shops is called Black Press Coffee, 72nd Street and Columbus. Very close to the Dakota Apartments, in which case we were there yesterday. Maybe we'll have time to walk around. I'll show you guys up there. But that's a very nice one. Very, very good coffee up there. Bree Grams is here. Says, good evening, everybody. Don't forget to smash the like button. Thank you so much, Bree. Hope you had a good day. Dusty Cole, welcome. Fun Feeds, Robert. GGMYC. Yeah, Gigi is talking about the weather. It honestly feels like a spring day out today, because even though it's 40 degrees, we've been dealing with, I think these guys got into a little bit of a fender bender. That's not good. Even though it's 40 degrees, which is kind of cold, right? It's been 10 degrees. So it feels a lot better. Feels awesome. Brian J. Donovan Jr., good to see you. Jay says, hi, Tom. I just talked to my Fidelity representative yesterday and asked the same question. What did he say, Jay? Because I think, I'm almost 100% sure that Fidelity now offers index funds that are zero fees. Now, I wish I could... Here's the Trump Tower. Maybe I'll take you guys in here again just before we head up. There's a lot of people who haven't seen the inside. Oh my gosh, a big difference in the sound. My ears were ringing out there. Everybody's clanging, banging on the horn. Really nice in here, though. Very quiet. Very clean, I would say. But if you guys have the time, this is what I would recommend. There's so many free videos on YouTube of Jack Bogle giving speeches on C-SPAN, on MSNBC, and they're all pre-recorded and they're actually up for free. And he'll explain his research, or that his firm, the Vanguard Group, has done as it relates to management fees. And back in the day, if you're talking about the 70s and 80s, some of these mutual funds that Wall Street was selling included, 5% front-end load fee, 5% back-end load fee, as well as a 2% management fee. So think about how much retail was being fleeced back then. It's gotten a lot better, guys. So, that's the one thing I would challenge you to do in the new year. Get with your financial advisor or a registered financial professional and just ask them, can I get into something that is the same product but that has less than 100 basis points of expense ratio? You don't need to be paying all these egregious fees to Wall Street. You don't need to. Hey, Yogi is here. What's up? Says, is this the Trump Tower? It is. Now, this is the bar on the second floor, but the bottom floor is actually a bar and grill, but I think it's only open for lunch. But really nice in here. Hawaii is here again. Says, aloha, Tom, and everybody in the chat. Good to see you, Hawaii. Thanks for joining us tonight. Happy almost New Year. We have 2 trading days left in the year. Tomorrow, Thursday, and then Friday. And that's it. Then we're done for the year as it relates to trading activity. I can't believe it. Hey, Fabio, this is Tom. On the chart, do you usually use only the 50 and the 200-day moving average? I use them the most, I would say. I use them the most. And the only reason why I use those two the most is because Paul Tudor Jones uses them the most. So I'm just totally copying what he does. If it's good enough for Paul Tudor Jones, it's good enough for me. Hey, Sparks Carnival, what's up? Says, hey, Tom, we get new unemployment data tomorrow. I think you're right. I think we do. Today, Sparks Carnival, I think we also got pending home sales, and no, that fell off a cliff. Now, I don't remember the exact numbers, but pending home sales fell off an absolute cliff. Love the American flag up here. Hey, For the Love of God is here. Says, hello, Tom. You're a class act as always. Thank you so much. You are a class act as well. Thank you for being here. But let's start to head up to the Upper West Side because I want to make sure we have ample time to show you guys around a new part of the city. Very seldom do we venture all the way up to the Upper West Side, so maybe we'll actually be able to get all the way up to 86th Street and show you guys the Museum of Natural History. I think that'd be kind of cool. It's one of my favorite neighborhoods. Last night, even though we did venture up there to the Upper West Side, we only got to 72nd Street, and I think I want to try to go further, if that makes sense. Hey, Derek says, hey, Tom, hope your Christmas was good and your new year is blessed. Thank you so much, and I wish the exact same for you. Thank you for the kind words and the well wishes. as we are now on the corner of 5th Avenue and 57th Street, the official Billionaires row. This is a really nice shot of the big snowflake that is hung in between 5th and 57th. Preston 984 says, hey everybody, good to see you, welcome. Dan Zhang says, Tom, I just researched the Fidelity's S&P 500, ticker FXAIX. It is a mutual fund, so you can't see it on TradingView. So is that the one that has zero expense ratio? No fees, right? Now, I quickly want to bring up a couple things. This is the Louis Vuitton store. I'll quickly show you guys the windows. But I think there's three things that I want to cover today, which is mainly a little bit of a review from yesterday, but I think they're very critical and very important to talk about. Now, the first one is the bond market, right? So we're going to be talking about not only the sovereign bonds or government bond market, so US Treasuries, but we are also going to be talking about corporate bonds a little bit as well. Now, generally speaking, right, and we're going to be talking in generality here, as the bond market sells off, right, as the bond market falls under pressure, yields rise, that also then puts a little bit of pressure on the stock market. And I think that's what we saw again today. Now, 10-year US Treasury yield is on a tear. Okay, so Treasury market is selling off. This is the flagship Apple store here on 5th Avenue. So, bond market selling off today. The 10-year is 3.8, almost 3.9%. Now, is it possible we may hit 4% on a 10-year yield before the end of the year? I think it may be possible, and I think that may put additional pressure on the stock market. So that is the government bond, right? However, we have been focusing very, very heavily on junk bonds, okay? The junk, because junk bonds tend to move first. There's an old saying that the junk tends to move first, and oftentimes we could use junk bonds as a leading indicator, okay, for where, companies and stocks may be going. Now, there's an ETF, the Spider Bloomberg High Yield Junk Bond ETF. The ticker is JNK. This is the Plaza Hotel. Let's see if we could actually go in again. I'm not sure. Usually during the holidays, they close it off. But let's check. Let's check. It's very beautiful in there. I think you guys will enjoy it, but let's check it out. Now, ticker symbol JNK. And if you want to see a couple of visuals of this, I've posted those charts on my Twitter. Yeah, I think it's blocked off. Ah, well, we'll go in some other time after the holidays. And it seems to be carving out this very steep and egregious, sort of like a bear flag. And today, junk bond ETF was down about 2%. So junk bonds we're putting under a ton of pressure. And as a quick review, junk bonds are non-investment grade that carry very, very high yields. So in order for investors, to buy these bonds, they're going to demand higher yields because the credit quality or the credit worthiness is very low. So there's a very, very high risk of default. So if junk bonds are being dumped and being sold off and yields are spiking, well, we can interpret that as many investors on Wall Street are very, very nervous about the health of a lot of those companies. Ooh, man, that's not good. Missing child. Let's get a shot of this just in case anybody sees. It's horrible. So check that out. Check out junk bonds. Bond market sold off big today. And then next we'll talk about Apple. Hey, FredX is here. Welcome. So now this side is what you call the Plaza Hotel Residences. Okay, so the front where we just walked past, that is the hotel. So if you want to stay here for a couple nights, you go on the other side around here on the front entrance. But if you either want to rent here or you want to purchase an apartment, this is actually where you would go in. There's two specific doors, one of which being right here, and then the other being right there. You could actually live, buy a residence here. That would be amazing. Could you imagine actually living in the Plaza Hotel, calling them one of the most famous hotels in the entire world your home? I think that would be amazing. Yeah, Sparks Carnival, that's another good point. You know, energy stocks also were hit hard. Toby Sanchez is here. Says hello, Tom. Have a happy and safe holiday to you. Thank you so much, Toby Sanchez. Very kind. Juan is here. Says, hey guys, let's support Tom's channel. Thank you so much. Let me try to fix something. Here we go. So Michael Joseph's total equity market loss in 2022 is 10 trillion. That is what a tightening of money supply looks like. Yeah. And, you know, so Michael Joseph makes a good point. But if you look at the Fed balance sheet, and this is all publicly available information, by the way, if you look at the Fred website, you can look at the Fed's balance sheet in real time. Now, we know that the Fed's balance sheet is made up of mostly U.S. Treasuries, mortgage-backed securities, but it's only rolled over a little bit. Okay, so if we really get cranking here, you know, liquidity in, liquidity out, I think we could see very significant price declines here, everybody. John, what's up? Ryan Beck says, Tom, what level are you eyeing on Apple where you think we'll start to see capitulatory volume on the downside? Well, I posted two charts on my Twitter, and I think it's very possible we could gap fill. There's a massive gap at 95, between 95 and 100. I would not be surprised if we could start to decelerate towards that level. Because here's sort of my thought process there, right? If you look back throughout previous bear market cycles, and I've done this, you know, it's very good to do post-analysis of this stuff and study historical bear markets. You know, once these leaders top, it doesn't matter the fundamentals, it doesn't matter how great of a company it is, they just go down. And there's been this argument now, especially amongst the Tesla community, you know, maybe they're right, and maybe I'm wrong. You know, I think that's the beauty of a market. You know, nobody can claim that they're conclusively 100% right. I think that's what has drawn me to the investment business, because it's a constant puzzle. But many people are saying that the only reason why, you know, Tesla is going down is because Elon Musk is selling his stock. Now, I would disagree, but that's okay. That's okay if we disagree. I would disagree with that. It doesn't matter if Elon is selling his stock, in my view. We are in a significant bear market, and you have companies like Alphabet unwinding here. You have companies like Amazon unwinding here, even though they have decelerating EPS and Tesla has accelerating EPS. I get that. But in bear markets, stocks don't need reasons to go down. They just go down. And Tesla has been one of these big liquidity junkies. So not to ramble on too much, but the last stock that really hasn't cracked, you could actually see the One World Trade Center all the way down here. But the only stock, to Ryan's point, that hasn't really cracked and entered what's called a stage 4 decline is Apple. And over the past 3 weeks, we've been monitoring this on the channel, saying Apple's gonna crack, this thing's gonna crack, and when it cracks, it's gonna freaking blow the doors off of this market. And I think that waterfall sell-off, in my view, started today. Apple down 3%. So, if there's gonna be a deleveraging and de-risking here, there's no reason why Apple can't go down another 25%. I understand the fundamentals are great. I understand it's a great company. I spend thousands of dollars at Apple a year. I get all that, but we are in a very vicious bear market, and stocks go down during bear markets. So I think if there was a target, I don't know, I'm thinking it probably could go down to $100, something around there, depending on monetary policy decision as we go into 2023. I think rates are going to stay elevated, and I think the Federal Reserve is going to keep putting the pedal to the metal as it relates to raising rates. But again, these are just my personal opinions, okay? I know I get emails now all the time now that the channel has grown. I just want to be very direct and clear about this because I think it's important. You shouldn't watch any sort of stream or YouTube video and make a conclusive investment decision based upon what somebody talks about here. You got to really do your own work. But I think it's just important to say that. But here on Walks to Wall Street, we have open conversations where we share ideas. We don't promote any type of investment. Oh, did you guys see that dog just zip up there? That guy in the pickup truck is the biggest tool on the island of Manhattan right now, in my view. Would everybody agree with that? The guy in the pickup truck, biggest tool on the island, hammering on the horn. It's like, just relax. You're gonna get to where you need to go. You're gonna be fine. Road rage is just a waste of energy. Everybody's gonna get to where they need to go. Everything is gonna be fine. Take a deep breath. Life goes on. Life is short. You don't need to blare your horn and hammer on the horn and get upset. That's my piece of advice. Ali Star, what's up? Will M says dog plus road rage equals double drink.
Yeah. So weird, huh?
Yeah, Brilski says if you're late, you better get better on managing your time. Now, here's the reason why I took that stance on that. Oh, but guys, look at this. That is so cool. So this is the top of the Trump International Hotel and Tower. Look at the very, very top right corner of the penthouse. You could see a massive Christmas tree there. I think somebody may have bought the top 2 floors penthouse, and maybe they're there for the holidays. That is so cool. That's awesome. Now here's something I learned, I think, and I'm glad I learned this lesson, I would say a little bit earlier. But I used to be like a big ball of nerves, like crazy stressed out. I'm on the Long Island Railroad, I'm on the subway, I'm like, I'm gonna be 5 minutes late, I'm gonna be 10 minutes late to my client's appointment. And I would like stress myself out to the point where you're almost physically getting sick. But once you arrive to the place, like, it's not that big of a deal, okay? And what I like to tell myself is, look, in 20 years, you're never gonna remember the one time where you were 10 minutes late, to a meeting or an appointment. It's, you never look back when you're 80 years old and say, oh, I wish I was, right on time to that one appointment. Now, you should try to be on time, but don't stress yourself out like a crazy person because you're gonna be 5 to 10 minutes late. It's just going to kill and deteriorate your health. So this is the inside, everybody, of the beautiful JW Marriott Essex House. It looks absolutely beautiful here. Yeah, Sparks Carnival, you're right. No use getting upset about something that's outside of your control. It's a waste of energy. And I used to do that all the time. I used to be really, really bad with that. And I made myself incredibly, incredibly sick. because I was working myself like a dog. I was a basket of nerves. Oh, really quick tip. All right, holding that thought, quick tip here. So I usually on Fridays, Saturdays, and Sundays at 6:30 to I believe about 9:30, they have live music here. Sort of like, what would you call that? String instruments. So like cellos, harps. It's really, really nice. And they play it right here in the lobby of the JW Marriott Essex House. So if you're staying here, make sure you check it out. And here is the main overhang right here at Central Park South. Hey, Ryan Royal, what's up? Hey, Stephanie is here. Says, love the music. Our pal Daryl is here from Chicago, Illinois. Good to see you, Daryl. Hopefully you're staying warm. Merry Christmas, happy holidays to you. So now we're going to pass another notable building here at Central Park South. So for those of you who are unfamiliar with the area, this is the official start of Central Park, right? So right across the street, that is Central Park. It runs all the way from 59th Street, Central Park South, all the way uptown to 110th Cathedral Parkway. And all the way on that side by the Apple Store is 5th Avenue. And then all the way right here, where we're about to be right now, is Columbus Circle. Hey, Savi says, hey, Tom and everybody, happy holidays. Thank you, Savi. Happy holidays to you as well. Meld says, oh my God, the JW Marriott Essex House is $500 a night. You know, I thought it would actually be more than that. Maybe they're running a special, but usually, you know, between the JW Marriott, I should say 157 building, right? So the Park Hyatt, they're usually like $950 to maybe $1,000 a night. They're really expensive, crazy expensive. And right down the road, my friends, this is where they are going to be dropping the ball on New Year's to ring in the new year. But this is the New York Athletic Club. Really bougie, nice place. Richie M says, Tom, it's actually $749 a night. That's still pretty expensive, no? Wouldn't you say? To stay one night at a place? It's really beautiful in there, though, not gonna lie. Hey, Austin City Limits says, Tom, stock market futures are at par for tomorrow. Ah, Evan Weeks, yes. So Evan Weeks makes a good point. He says, Tom, have you ever taken the stream up to Lincoln Center? We have. We actually were there yesterday. I think we're going to do the same exact stream route as we did yesterday. So we're going to hit Lincoln Center. We're going to go uptown because it's finally not freezing cold and we can bear to be outside. So I think we're going to hit Lincoln Center again. Then I want to show you guys the Dakota one more time and then the Museum of Natural History, all of which is on the Upper West Side. So you could think about 72nd Street, Central Park West for the Dakota, and then the Museum of Natural History. You could actually take the train there if you wanted. Get off at 80th Street, 86th. Really, really nice over there. But the two massive towers we are looking at right now, my friends, was the former Time Warner Center. Now they are known as the Deutsche Bank Towers. And if you remember from our Wall Street walk, the old Deutsche Bank German bulge bracket investment bank building is now vacant. I'm not sure what they're going to do with it, but the investment bank is now moved uptown, pretty much like every other investment bank. Now here's something we've never seen before, or at least I've never showed you guys on the stream. This is the main entrance, well, I should say the front entrance of 220 Central Park South. Now, this building is one of the newer additions to Billionaires Row. It is the one with the very bright gold top. And it is home to Citadel Security's very own Ken Griffin. I think I like the architecture here. It's sort of brick and mortar maybe, as opposed to all the mega glass structures. Hey, Juan Vasquez says, I got a job offer in Manhattan to do graphic design. Vegas to New York, is it worth it? Hey, Juan, congratulations on your success, man. That's awesome. Look, I'd say go for it. If you want something, if you want to change, to do something different, if you want to experience New York, might as well do it. I mean, it's about to be 2023. I think you're going to have a lot of success here. But hey, congratulations on the job offer, man. That's fantastic. See, the wind always picks up right around Columbus Circle. I'll give you guys a live look at Central Park. You can see everybody walking their dogs, having a good time in Central Park. Now, Central Park in the spring and in the summer is probably my favorite. It's just too dark and it's too cold, Central Park, during the winter months. Not a big fan, but Evan says, Tom, if I move to the New York City area, I'm totally getting a membership / season tickets to the New York Lincoln Center. Very cool. Ooh, the wind is brutal, but it's not too cold. So that's good. Now, did anybody else see the news that Japan, or I should say the Bank of Japan, I believe it was last night or the night before, so don't quote me on the exact day, I think it was maybe 2 nights ago, is now forced to engage again in emergency bond buying operations. So this is a big problem. This is a very, very big problem. And, you know, if we think about monetary policy as a whole, not just in the United States, right? I think it's better to understand the monetary policy environment globally, not just at the Federal Reserve here in the US. Let me give you guys a shot of the fountain here at Columbus Circle. I don't think I've ever given you guys an up close and personal view of it. But the Bank of Japan is now forced to engage in emergency bond buying operations again to prevent total and utter financial collapse. So just as I would say pretty much every other central bank around the world, including the ECB, the Bank of England, the Federal Reserve here, is engaging in quantitative tightening. You know, Bank of Japan still is holding their benchmark interest rate in the negatives, right? And they're continuing their bond buying operations. So I honestly don't know how this unwinds. I think it's just going to need to be a perpetual debt cycle, because every time they try to do something, it breaks. Any thoughts there? Do we see any way out as a team here, Walks from Wall Street? Do we see any way out of this debt acquisition, debt-based monetary system? Is there a way out that's not going to destroy the global economy? I honestly don't know the answer. I do not know the answer to that. Jonathan Francis joining us. Good to see you, Jonathan. One more shot at Billionaires Row before we continue on our walk pressing uptown. JTJ says the dollar is strong though, right, Tom? Relatively, yeah. Relatively, yes, it actually is. But the dollar, or the Dixie's actually come down. So the Dixie is an index that tracks a lot of honking today, guys. People need to get in the holiday spirit, right? Instead of banging on the horn. Now, you're right. The dollar has been relatively very strong. But I would say over the last 3 months, the Dixie's actually come down a bit. And the Dixie is an index that tracks the relative strength of the dollar against a basket of foreign currencies. Anybody know what these things are? Maybe they're like temperature readers? I don't know. I've never seen these before. Let's see if we can get a closer look. Anybody have any idea what these things are? Anyway. All right, team, here we have once again the Trump International Hotel and Tower. On the right side, you have the entrance to the residences. So people actually can rent apartments here, you can buy. But in the middle, where this lovely family is going into, it's actually the hotel. Very nice hotel, by the way. Pretty much Billionaires Row, 57th Street to 59th Street is littered with 5-star hotels, very upscale luxury hotels that tend to do really well during the holiday season, especially around New Year's too, because if you think about it, if you're high up enough, you could probably see Times Square. You don't even need to go out in the cold to watch the ball drop. You may be able to watch it from your hotel room. No, I don't think it's the 5G towers, because the 5G towers, they're massive. They're like these massive MIMO, they're called. Maybe it's some temperature gauge for the Weather Channel. Who knows? I've never seen it before. I think they just put it there. Somebody says they're government spying on the Trump towers. Maybe. I don't know. Hemi Power, what's up? Vivian, Francesca, good to see you. Now, this building is another very famous building. I don't think I was able to show you guys the sort of inside of the roundabout here, but this is 15 Central Park West, which was actually home to Alex Rodriguez, Derek Jeter. But if we're talking about Wall Street legends and Wall Street titans, I believe the former CEO of Goldman Sachs Megabank, their headquarters is 200 West Street down in Lower Manhattan. I believe our friend Lloyd has a very nice place here. Beautiful apartment complex. Notice the massive big cast iron doors. Beautiful walkway down all the way into the front entrance. But here's something very unique. You actually have your own personal gated roundabout. So let's say if you don't want to be picked up outside, maybe you're a big celebrity, high profile person, you could actually drive right into your own gate and you don't have to worry about anybody spotting you, seeing you. And you have a great view of 432 Park Avenue as well. But the courtyard is very lovely, as Fred X has pointed out. You know, there's actually, not to get too far off topic here, but it's the holidays, might as well, what the hell. There's actually an interesting article in the New York Post that came out a couple years ago highlighting 15 Central Park West. And the article was about the massive amounts of holiday tips that the doormen get. You'd be surprised with how much the tips are. Hey, DWG is here, what's up? Hey, Dr. Murray Hill, MD, good to see you. Says, I thought they could be emergency repeaters or possibly shot spotters, but your guess about weather could be a good one, since most weather information in Manhattan is taken from Central Park. Yeah, I mean, the reason why I'm curious is because I've never seen them before, and I'm always around that area. You know, it could be, you know, the Weather Channel, the National Weather Service tends to take readings in Central Park, so who knows? I don't know. Now, I do have a telecom background, so I don't think they have anything to do with telecom. Usually these cell towers are very big. They're almost like clunky looking. And if you want to talk about 5G, they're even bigger. If you want to Google one, you can Google like massive MIMO. These are very big, clunky, and you'll mostly see them on the top of residential apartments, roofs, things like that. Look at these dogs right here. Oh, it was a beagle. Nice. But I would say just in general, guys, you know, I want to develop, or I want to get everybody in the habit of developing these very set, systematic processes for developing an investing thesis, right? Understanding all of these mechanics, okay? We're looking at the leading indicators, okay, to then drill down and try to predict GDP growth, try to predict corporate earnings, and then from there, it'll give us a general idea of where the general market may go, and then we can hammer down into more stock-specific, industry-specific ideas. And I would say my biggest concern in this market, my biggest number one concern is the health of the debt market. And we're starting to see these erratic movements in the government bond market. Again, you know, 10-year U.S. Treasury yield got a little bit of a bid today, which means treasuries were selling off. But we had very, very heavy selling in the junk bond market. And the junk market tends to lead all of the other, I would say, sort of categories, right? Investment grade, non-investment grade. The Smith once again here. Let's cross the street. We'll do one lap around Lincoln Center. But if you think about that, you know, why would, if we just want to discuss further, right? And I'm not saying I'm right or wrong, but why would the junk bond market be falling under pressure here? Why would junk bonds be selling off? What are investors thinking that would encourage them to dump junk bonds? I've been noticing a lot of ambulance FDNY activity tonight specifically. Hopefully everybody's all right. Hopefully there's no real emergency where people are hurt or harmed or something like that. But, I'll quickly point out PJ Clark's. Now this is another very famous place, but I'm actually not a huge fan of it, but there's some people that really, really enjoy PJ Clark's a lot. I'm not one of those people, but look, if you're a tourist, I think you got to try it at least once. I think that would be appropriate. But anyway, getting back to the junk bond market, you know, I think investors are losing confidence in the ability for some of these companies that may be a little bit more financially distressed to make good on their debt and service their debt. So I think a lot of these junk bonds are being repriced. And if you remember yesterday, we talked about a specific company, and not to be mean or single any company out, but just as a broader based example. And we just so happen to use Coinbase. And, you know, I've had this view, and again, my personal views, it doesn't mean I'm right, it doesn't mean I'm wrong, that I think on any rally, Coinbase could be a potential short. But I've really sort of covered that investment thesis by not looking at the individual stock, but by looking at its bonds. And Coinbase's 2026 maturity bonds are not only trading now at 50 cents on the dollar, but their yields are over 20%. Okay, so that signals real distress here in the market. And again, I'm not trying to pick on Coinbase only, but investors are concerned. And you know, if you have a bond that yields 20%, like that is some junkiest to the junk levels there. So I would say that's my biggest concern for the market. You know, if we want to know where the stock market is going to go, I think it's appropriate to investigate the bond market, both sovereign and corporate bonds. I love this fountain here, Lincoln Center. It's one of my favorite things about New York. It's so peaceful. You know, I think I may come back here tomorrow and just make a standalone video, maybe 20 minutes of just recording this fountain and have it up on the channel. This is for people to relax and listen to it. It's really nice. Yeah, Michael Joseph says, Tom, bond yields 20%, 80% chance it defaults to zero. Yeah, so, and that's exactly why I'm so concerned about that. And, you know, there's a lot to be pulled from the bond market. And my whole thought process on Coinbase is that investors are spooked from this whole, you know, big fraudulent FTX. I guess you can call it a scandal, right? I think it's appropriate that we shouldn't use the terminology allegedly anymore because, you know, I mean, maybe we still should, but I think a lot of investors were spooked by this FTX debacle. So why would anybody want to have pure play exposure to a broker dealer or a brokerage, a custodian, an exchange that has 100% gross exposure to cryptocurrencies without anything to fall back on? Now, if you think about, if you're a retail investor, and let's say you want to get exposure to Bitcoin, right? I'm not saying you should, I'm not saying you shouldn't, but let's just say, for example, you did. Well, why wouldn't you just go to Interactive Brokers? Why wouldn't you go to Fidelity? Fidelity has Fidelity Digital Assets now. You know, Interactive Brokers, you could trade other cryptocurrencies. So I think investors are going to find more safe haven with institutions that have more diversity in their exposure, right? They have a big equity options business. They have a big, obviously, stock and equity trading business. It's not only sort of, you know, sole focused on cryptocurrencies, because what if there's another big black swan event? You know, investors are going to be like, I'm just going to custody all my stuff with Fidelity. I'm going to custody all my stuff with Interactive Brokers because there's no equity trading, there's no hedges, there's no nothing with Coinbase. It's just pure based exposure to the crypto market. So, and I think the bond market is literally telling you that, right? So we'll see what happens. But tonight, team, we're going to be headed further uptown. We just took a little bit of a walk through Lincoln Center. Very beautiful. Western Mass Dave says, I watched the old Wall Street Scapegoat videos to relax. Those were the good old days. Those were the good old days for sure. Yeah, Dallas F makes another good point, and Dallas F says, and Tom, they have been there since day one anyway. Oh, this is a really nice shot here. You can see all the different signs displaying all the different shows. Sil Lima says, hey Tom, good night from Brazil. Good to see everybody, all of our Brazilian viewers. Thank you for joining us on this expedition to the Upper West Side. Hey, Wendy England, what's up? But if you guys have been enjoying the live stream so far tonight, please hit the like button and click the subscribe button if you're new. We do these live streams 5 days a week, starting at 8:30 p.m. Eastern Time. And we'd love for you guys to join in the conversations and join the team here at Walks on Wall Street. Very beautiful here, the Star Theater. Yes, so Ali Star says, Tom, can you go to Amsterdam Avenue? I think that's what we're going to do tonight because last night, I think we went straight up Columbus, did we not? Excuse me, I apologize. Dog right there, beautiful. Oh my God. Okay, Evan Weeks, thank you for bringing that up because that was one of the topics that I wanted to bring up. So Evan Weeks is just reading about what happened with Southwest Airlines. So in our Discord, I posted a Wall Street Journal article talking about the Southwest Airlines. I think there was over 1,000 flight cancellations. And one of the things that, I think it was the CEO, Now, I'm not 100% sure, but I think one of the things the CEO attributed that to is very outdated software or scheduling software. To me, I think that's a little bit of an embarrassment as it relates to U.S. infrastructure. Like, I have a lot of friends who live abroad, who are from other countries, and they seem to never have any problems with their airlines. But this year has been a really, it's just been horrible for air travel. And I've traveled well over 20 times this year. I've only had 3 flights that weren't delayed. Only 3. Now, I understand we're coming off of the pandemic. Everybody's stretched really thin, but air travel has been horrible. Now, has anybody else in the chat, because I don't want to make this, I don't like to be too biased and just dump on something if not everybody, feels the same way. Anybody in the chat who has traveled this year experienced some of the same hardships, cancellations, or delays? What has been your experience as we head past the Apple store here? Rich Child 9 says Southwest Airlines is the one that got all the COVID bailout money. I think all of them did, to be honest. Evan Weeks is software architect / IT director. From what I'm reading, it sounds like someone kicked IT maintenance work down the road. Jared Covey.
Like just something I didn't know about.
Looks like nobody's had an experience. Why? Maybe you guys don't fly too much. Unijay says I've been avoiding flying for now. Evan Weeks says it happens all the time. IT infrastructure is easy to cut from a budget because it doesn't make money. But as you're seeing, if it's ignored, it can very much cost you money. Very good point. Really, really good point. Rich Child 9 says I'm avoiding flights for now. I think that's probably maybe best, but for some people who have to travel for business, definitely not good. Michael Joseph's Southwest software is called SkyMax, and it failed big time. With all of the cancellations and all of the delays this year on the airlines, I'm just so surprised that we haven't, knock on wood, please God. I'm surprised there wasn't like a big cataclysmic event, because I'm not even joking. Whenever I get on these airlines, and I fly American, it's, hey, everybody, we have a little bit of a problem with the engine. We have to be towed back to the gate, have a mechanic work on it. We'll check it out. And then we sit there for 2 hours, deboard the plane, get back on the plane, then we take off 4 hours later. Another one, get a load of this. One of the flights that was the worst this year, we were on the runway, okay, taking off, and the battery dies. And we had to be towed back to the, I don't know what it's called, the dock or whatever. And we had to change the battery. I'm like, don't you check that before we're barreling down the runway? Anyway, I think it's just a lack of skilled labor. Now, this is a brand new building they just built on the Upper West Side. You'll notice the difference in the contrast a lot of newer style architecture. Wow, look at this. I'll give you guys a view all the way up. Melissa 2087 says, Tom, one time on Frontier Airlines with no AC. Oh my God. So this is Amsterdam Avenue, everybody. We haven't been over here on the stream, I think, since a year. It's been well over a year. Ah, the tarmac, you're right. RJ's is Southwest is $10,000 or 10,000 pieces of luggage at the airport. That's crazy. People are throwing out their Christmas trees already. I think it's a little bit too early. Okay, I think we should be good. So this is the corner of Amsterdam and Broadway. And this is the main 72nd Street subway entrance right here. Now check out the architecture on this building in front of us. Really beautiful.
Might have been on this side.
71st Street. So maybe we'll take just one more look at the Dakota, which we were at yesterday. But I want to show you guys the entrance to this building. Wow, look at this. See, these are my absolute favorite right here. Look at the detail. Yeah, the gate, the entrance is amazing. And it's a lot quieter on the Upper West Side, you'll notice. Hey, War Walker, good to see you. All right, let's continue on our way. So once we get to the corner of 72nd Street, we'll bang a right. We'll head all the way down to the Dakota again. I just think the older style buildings have a little bit more craftsmanship. Now, the Apple Savings Bank, or the Apple Bank for Savings, I don't think you're allowed to film in there, but it is amazing in there. If you're visiting New York, just come in here, check it out, take a walk through it. It's a lot better than the more modern style banks of today.
Come right
So we're on the corner of Amsterdam. We have to pass Columbus, and then we will be at Central Park West. Now, since we're here 72nd, I might as well show you one of my favorite coffee shops of all time. It is called Black Press Coffee. Haven't been there in a while. Maybe we'll have to go there tomorrow if I can get the time to get up here. But very nice residential neighborhood here. Here is a Mediterranean bar and grill. Hey, Dad's gone live. What's up? Says, what's up, returning viewer now? New York is way different from California. Good to see you. Thanks for joining us again. We are on the Upper West Side of Manhattan. You know, you're actually perfect timing because I'm going to take you to see the Dakota, which is the building where John Lennon unfortunately passed away. Hey, Irish Dylan is here. Says hello from Dublin. Good to see all our Irishmen here. Now, I think my family's lineage on one side of the family comes from a place in Ireland called County Mayo. If you're familiar with that. Not sure if you're familiar or not. Hey, Rat Fink, thank you so much for being here. Appreciate it. Irish Dylan says, yes, Tom Mayo. Got it. Copy that. No, Michael Joseph says, Tom, have you ever been to Ireland? I haven't. I want to go. You know, let's talk about New Year's for a minute. I think it's a good segue. In 2023, one of the biggest things that I want to do is travel abroad. I never leave the country. Look at this guy. I never leave the country, so I want to travel. I want to go to Asia. I want to go to Korea. I think that's going to be my main travel destination. Hopefully I can make it to Ireland, Italy. We'll see. But the only thing, it's expensive. So I was looking at tickets. Okay, a one-way ticket to Korea is $1,300. Now, obviously, I don't know what to compare this to, but I would assume that's quite high, right? From JFK to South Korea. $1,300 one way for economy. It's pretty high. That's crazy. Hey, Walking Minnesota, what's up? I know, yeah. I went to Austin, Texas. It was nice. I went to Philly. Philly was good. Yeah, E. Smith says, Tom, Apple stock hit a 52-week low today. Yeah, we were just talking about that. I think that is the main sort of topic for conversation that we've been discussing for the past 3 weeks. You're 100% right. And, you know, Apple has been the only, I would say, big blue chip that hasn't cracked yet. And it cracked today, breaking that very critical 129 level. It was down 3% today. And look, what did I say? You know, S&P 500 is a market capitalization weighted index, which means that stocks like Apple make up the majority of the weighting. I think Apple has about a 6 to 7% weighting in the S&P. So if Apple's down 3%, the S&P is at least going to be down 1% for sure. So look, if we continue to accelerate to the downside, which I think we will, I think Apple is just entering its stage 4 decline. You know, I think you could see much, much lower prices here. But very good observation. Hey, someone says hi from Mexico City. Welcome everybody from Mexico City, Mexico. All right, we're coming up on the Dakota. I feel that dopamine hit. You guys feel that? Dopamine levels are rising. We're about to see one of the most beautiful architectural marvels in the city. I'm excited. Hopefully you guys are too. Julia M says it's getting hard to follow. I keep getting booted off. I think it's the stream. We've been having so many issues with the live stream, and I apologize for that, but we're on a new streaming software that is really egregious and horrible. Hopefully by the new year it gets fixed. But here we have it, everybody. This is the very famous Dakota that is on the corner of 72nd Street and Central Park West. And you could see actually a little bit all the way into the courtyard where they have the beautiful Christmas tree. Now, as you guys know, my favorite thing about this is these beautiful oil lamps here. So you can see the main intersection, Central Park West. One of the main entrances of Central Park is right here. You have the subway entrances. But more importantly, here is the main entrance. I'm going to walk across the street so you guys can see it a little bit more up close. Yeah, Dr. Murray Hill, MD, says those lanterns supposedly still use real gas like the old days. I think you're right. I think they still do. Now, Dr. Murray, MD, here's another thing I really enjoy about this building. And you could really see this better during the day. Not necessarily now, but I think almost every single unit in the building has the original wooden shutters. You guys see this? Maybe as we get a little bit closer. You could see in the window you have these beautiful wooden shutters here. And I think they are the original. That's an awesome shot. But just the detail alone on this building is really fantastic. Now, if you want to come and visit this yourself, pay close attention to the detail, and I'll give you a quick example here. Notice all the railings that are lining the entire building, stretching all the way to Central Park West. Check out all of the, I think it's called neo-Gothic, maybe Gothic style. Really unique. And again, I'd like to point out all the original wood paneling, all the original beautiful wooden shutters here. And here's the subway entrance. Now, here's a little tip. If you notice the green lights at the top, that means they have MetroCard stations where you could purchase. So maybe since there's a little bit more light, you guys can see the architecture. And that's the thing, they go all the way around the perimeter of the building. They don't really make buildings like this anymore. Hey, Steph UH, good to see you. Now, we pointed this out last night on the live stream. You know, you could be, oh, look at this dog here. You know, you could be on the Upper West Side of Manhattan, looking all the way down to Billionaires Row, sort of seeing the evolution of the city, seeing the evolution of the architecture and the design, right from one of the oldest apartment buildings in New York, seeing a huge contrast into the mega skyscrapers of Central Park Tower, 157 Steinway building, and all the way here, 432 Park Avenue. You can essentially see the evolution of American capitalism right before your very eyes. It's kind of awe-inspiring being here, honestly. Maybe we'll cross the street. I'll take you guys to these strawberry fields. Might as well while we're here. Now remember, Central Park West is a two-way street. So you can go southbound and northbound. We are now looking southbound. And I think these are the official park hours. So December 31st, 8 p.m., January 1, 2 a.m. Oh, Midnight Run, a private event. Interesting. The band shell. That's really cool. Hey, NMB 045 says, hey Tom, joining late. Good to see you, NMB 045. Our good friend from Canada. We're up against the Upper West Side once again because it's so beautiful. But essentially what we talked about tonight is the bond market. Both the corporate bond market, especially junk bonds. Now, we talked about that specific ticker, JNK, junk bond, and it sold off very aggressively today. The 10-year U.S. Treasury yield got a big boost. The bond sold off, and I think that's why we saw sell-off in the stock market. You know, bonds selling off, yields higher, stocks lower, and NMB 045, we are just starting, again, to have Apple accelerated sell-off down 3% on the day. We've been covering that. Oh, you could actually see One Vanderbilt from here. I never noticed that. Interesting. Hey, M-Wall on the run. Good to see you. Here's the main Imagine sign, or I should say, symbol. And this is Central Park. I think we're gonna head up because we don't want to be late on time. I want to show you guys the one and only Museum of Natural History. Hey, the garlic is here. Good to see you. Thanks for being here. Cynthia Beale, good to see you as well. You know what's an interesting thing that I also want to do for the new year? And let me know, I'm curious, has anybody else done this in the chat? I want to go to the doctor and get my complete blood work done, right? Because from there, the doctor can tell you if you're deficient in a specific, vitamin, mineral, whatever they call it. And I want to try to keep tabs on that to optimize my blood. I think a lot of people walk through life and they have specific vitamin deficiencies or something. They just never really know it. And I think that can lead to misdiagnosis later in life. For example, I think a lot of the arthritis, and again, I'm not a medical professional. Please don't listen to me about anything medical, please. So feel free to just tune this out. But, especially a lot of arthritis stuff, I think, it could be misdiagnosed for just vitamin D deficiencies. So I think before I get too old, I'm not extremely old, I'm getting older though, I want to make sure I'm on top of my blood and get blood work done and see if I'm deficient in anything. Who knows? Maybe I have, I don't feel sick or anything. I feel great. I feel healthy as anything, but I think it's wise as you get older, or at least a little bit older, just to keep tabs on your blood work. Anybody else have that? Billy says, I get blood work every 6 months. Important to know your baseline. I'm sure they'll be able to tell you all that stuff, right? Yeah, Richard Vogel says you're outside a lot. I bet you have plenty of vitamin D. Maybe, I've noticed, so here's what I have noticed. Not to make the stream about medical stuff, but yeah, who cares? It's almost New Year's. I've noticed a very, very significant, and pretty much throughout my entire working career, very significant energy and mood declines, usually mid-January. And I think it's pretty obvious why. You're sitting in an office all day, it's dark, it's cloudy, but I think since I'm back and forth between Miami now so much, I may not have that energy fall off, if you will. I don't know. I'm going to check it out. I'm going to see what's up. Yes, GGMYC. This is vitamin D3 in the winter blues, yeah. Yeah, it could be just that. I think it's very common. A lot of people tend to get that. Rich Child 9 says B12. Tom, start taking that. Yeah, I'm just gonna get like a blood work done and just ask the doctor, what do you think I'm deficient in, if anything? I feel great, but you never know. I've been watching and reading a lot of stuff about people that have been doing that, and they're like, hey, I got my blood work done, and the doctor said, look, start taking this vitamin supplement, you're deficient in it, and it's completely improved their efficiencies in life. Yeah, Western Mass Dave, you're correct. All right, let's quickly cross here before I forget. Now, this, my friends, is one of my personal favorite coffee shops in New York City. It's called Black Press Coffee, and it's pretty close to the Dakota. All right, here we are at Black Press Coffee. MIWA says, yes, I got one every week 6 times. Jeez. Wow. Flat Smack says, diet and exercise is key. Yeah, and again, it's not like I'm looking for a specific thing. Like, I feel fine. Like, there's nothing that... Like, I feel fine. I think I'm very efficient. I think I get a lot accomplished and a lot done. But I think I could always be doing something more. I could always be getting better. And I think it's a good place to start. We'll see. We'll see. Oh my gosh, guys, this place closed down. This used to be a big barber shop here. There always used to be so many people in here. I'm so surprised it actually closed down. I can't believe that. Now, as we push further on, we are on 74th Street. This is where you'll see all of the beautiful brownstone buildings. Check out how unique and amazing these tree-lined blocks are in Manhattan. Very beautiful. This is a really, really cool shot. You know, it's cool to contrast this with Midtown Manhattan, you know, near Radio City, tons of tourists. Really cool. Yeah, Vivian says looks peaceful. It's really nice on the Upper West Side. Now, we're coming up on the Museum of Natural History, which is another one of my Upper West Side favorites. Yeah, NMD 045, that wouldn't be a bad idea. Now check out these fire escapes here. These are some of my favorite. I think these may be more, I don't want to say better than the ones in Soho, but I definitely enjoy them for sure. Wow, this restaurant closed down too? I always remember walking past this place and it being absolutely packed. Wow, that must have just closed down. Dr. Murray, MD. Says the rent is too darn high. Agreed. Now, Dr. Murray, MD is a medical doctor. Now, I heard a rumor that most New Yorkers are deficient in vitamin D, mainly because, you know, they're inside, they never get any sunlight. Is that true or is that a myth? All right, here we are, Museum of Natural History, one of my favorite places in New York, right across the street from the Shake Shack. (77th Street now. Now they're doing major construction on the Museum of Natural History. And I think they're building, in the process of building, a complete brand new atrium. Or I should say, not an atrium, what's it called? Planetarium, I think. Yeah, Mike MTL says love the Museum of Natural History. I do too. Now, when I was a CUNY student back in college, CUNY students would be able to access the museums for free. So I actually went in here about once a week. But you notice the new development. You guys see the sort of newer looking architecture here, in contrast to the very original architecture right now. Diana says, Tom, your mic isn't working properly. I really think it's the streaming software. We've had major problems. Oh, what does the mic sound like? Is it, maybe it's the wind? I don't know. I'll figure it out. Now, sometimes if the stream is a little bit glitchy, you have to refresh your web browser because it could be a misconnection on your end. But who knows? Maybe it is on my end. Yeah, Dr. Murray MD, that's probably the right way to go. Yeah, somebody says it's an ugly addition. I don't think it fits with the architectural theme. Not to be picky about it, but I don't know. What do you guys think? It just looks too out of place, I guess. It just sort of looks too out of place, I guess. I mean, it looks nice, but it's just too much of a contrast between the two. Now we're passing the Brown Harris Stevens. Let's see how much, see what the prices are. Wow, look at this. 1 bedroom, 1 bathroom co-op, $750,000. But the monthly maintenance fee is $2,147 a month. That's incredible. It's wild. 63 East 9th Street. Greenwich Village Co-op. 1 bedroom, 1 bathroom, $675,000. But the monthly maintenance fee is $1,162. I don't know. I think that's a little bit much. I think that's a little bit too much for the maintenance, but it's the cost of living in New York, my friends. Yeah, David Pershing. It's architecturally incorrect, Seinfeld. Yeah, Michael Joseph's is $2,000 maintenance is many people's monthly rent. You're right. Now, hopefully Andy's Deli didn't close down. I think it's usually open 24/7. This is actually one of my favorite bodegas on the Upper West Side. I usually get bacon, egg, and cheese on a cinnamon raisin bagel from this place. It's fantastic. And here's the Patagonia store. Now, I think Patagonia banned a lot of the major financial institutions and tech companies from imprinting their logos on the vests, things like that. So I don't think you're allowed to embroider anything on your Patagonia vest. But now we're standing directly across the street from the Museum of Natural History. Hey, Ren 1018, what's up? Yeah, Billy says any deals on the buy side these days won't even consider unless talks start. Minimum 20% off a list price. Yeah, I mean, prices are coming down. I mean, Billy, we got pending home sales data today, which came in horrible. You know, all the leading indicators are showing us that the housing market is slowing down, which I think is actually good, right, in the grand scheme of things, especially for all of our first-time and second-time home buyers out there. Ooh, looks like this BMW got a little bit smashed up. Hopefully everybody was okay there. Hey, Penelope, good to see you. Welcome to the stream. Queen 2105 says, Tom, what's your favorite 2022 movie? I don't think I've watched one movie this year. I don't think I could tell you one movie that came out in 2022. I'm not really a big movie guy, so I don't know if I could even say. I apologize. I'm gonna have to watch some movies. These are beautiful apartments here. Very classic Upper West Side. The Garlics' opinion on China opening up. Yeah, I mean, I think they were sort of forced to, right? I think they had their hand forced because of all the protests and the uprisings. And you're actually seeing some of the ADRs, right, the American Depository Receipts, perform rather well. Rich Child 9 says we're not missing too much, not a lot of good movies. Free Time says grab a slice. I may get something to eat up here, not gonna lie. I'm actually pretty hungry. Now, when I was a teenager, 19, turning 20, I used to work right on this block, right here, West 83rd Street. I spent much of my time on this block, working in the parking garage right here. I'll show you guys. And speaking of Seinfeld, not a lot of people know this, but Seinfeld's personal garage is right on this block, across the street from where I used to work. I used to work at the rental car place here. When people would return their car rentals, I'd take them downstairs and vacuum them out and wash them, things like that. Would always hang out with the firemen right here, FD&Y. They always have this painted. It's like a Dalmatian. Somebody says, did you ever see him? Yeah, I would see him all the time. He would ride his bike to his garage. And I actually witnessed some of the films. I think he used to have a show called Comedians in Cars Getting Coffee. And he would have all of his amazing cars in this garage right here. I actually think it goes down into the floor. And I would eat lunch on these steps right here. This actually used to be a computer store. Oh, it still is. Shine Electronic Computer. Nobody was ever in it, but I would eat my lunch here. I would get a place sent. I would sit here and look at Seinfeld's garage. And he would pull out his amazing cars. He would have all his entourage. And in the front, it would be a big Cadillac Escalade. And they ripped out all the seats. They put the trunk or the hood or whatever it's called up. And they set up all the camera rigs there. And they would drive in front of all of his amazing classic cars. But it's right here. No parking, 24-hour active driveway. This is where he keeps all his cars. And this is where I used to drive all the cars downstairs into this lot. I remember during the winter, it would get so icy here. I would always bust my you-know-what. Yeah, and I worked at this little car rental shop here. Kind of crazy how time goes on, I guess. I would actually used to sneak up to the roof. The roof used to have amazing, well, it still does, amazing views. Yep, right in here. Man, that brings back memories, man. I used to prop this door open here. Stairway. I used to always prop this open. You could go all the way up to the roof and hang out. It was like a teenage job. Wasn't bad. This neighborhood has changed so much, though. Just this street alone has changed so much. Yeah, Michael Joseph, I think I'm not sure how much it is to park there, but I will say this. If you want to park like an SUV, right, in a New York City parking garage, especially on the Upper West Side, a monthly pass can be well above $600 a month just to park your car. Wild. Why people have cars in Manhattan is absolutely beyond me. But they have them nonetheless. Now we're crossing over to Amsterdam Avenue. This car has been parked there since I've worked up here. Hey, DM, what's up? Oh, it says you've rented from there? I've probably seen you then. That's funny. The Garlic says, have you ever driven in the city? Yeah, I used to work for a rental car company. Driven many times. I think all of those, I'm not going to say terrible jobs. They're good jobs. Right? I don't hate on anybody's profession, but I think those jobs build a lot of character. Right? I mean, vacuuming out rental cars in New York City. I mean, the stories I could tell you guys about what crazy stuff I found in these cars. I mean, you guys wouldn't even believe it. Just dealing with just filth and just nasty stuff, man. Crazy. But the Upper West Side is awesome. I'm going to end the stream up here at Jacob's Pickle. Now, Jacob's Pickle is very famous. I actually don't care for it too much, but it is a good place. A lot of people do like it. And they actually just opened up another location in the Moynihan Train Hall, which I think is their second location, but this is their main one, right here on the corner of West 85th Street. But team, I think we had a good conversation tonight. We covered extensively the bond market, including the corporate bond market. We talked about the junk bonds. We talked about how Apple is now just starting to finally roll over here. Keep your eye on that 10-year U.S. Treasury yield, as it seems as if the bond market wants to sell off again. Only 2 trading days left. Can you believe that? 2023 is upon us. It's going to be a crazy one, guys. It's going to be a crazy, crazy year. So thank you so much for joining Walks on Wall Street again. Another fun stream. Thank you guys for coming out. I really appreciate it. And we will see you all tomorrow, starting at 8:30 p.m. So thank you so much for joining. Paul, Sparks Carnival, thank you so much. Richard, if you guys are new here, feel free to hit the subscribe button, hit the like button. Wendy England Palmettis, and if you guys want to join us on Twitter, where I post a lot of my equity research and charts and things like that, you could follow at Walks Wall Street. And I'm wishing you guys a happy, healthy, and very successful last 2 business days of the year. Finish strong, and we'll see you all back here tomorrow. Dr. Longus, Rich Child 9, Austin City Limits, Fred X, thank you so much. Dusty Cole, Camphor 210, thank you. Mike MTL, Tom G, Karina Thompson, Hawaii into the Mighty Bull. Have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. I'll see everybody right back here tomorrow. Bye for now.